From that we go straight to the business news on the programme, and I'm joined for that here in the studio by Brian Quinn from France 24's business desk. He's starting today in Hong Kong. A court has ordered the liquidation of the struggling Chinese property developer Evergrande.
So Stuart, Judge Linda Chan saying enough is enough as she issued that liquidation order. This after Evergrande failed to reach a restructuring deal with its creditors. Evergrande is the world's most heavily indebted property developer with around $325 billion in outstanding liabilities. It defaulted on its debts 2 years ago after Beijing started cracking down on excessive debt in the country's real estate sector. That default sparking a cascading liquidity crisis across China's property development market, which accounts for around 25% of the country's overall economy. Now, efforts by Evergrande to restructure its offshore debt fell apart last fall as Chinese regulators nixed the deal and put the company's chairman under criminal investigation. The latest ruling mostly affects Evergrande's offshore holdings. Most of its assets and debts, meanwhile, are in mainland China, where analysts say authorities are unlikely to order a massive sell-off as they try to kickstart an economy which is already facing a serious slowdown.
I suspect that the Chinese government will manage this liquidation process very carefully in a way that doesn't cause major problems for the Chinese economy. In other words, it's not a Lehman moment like we saw back in 2008. That said, it does tell us that the property crisis in China is far from over and that it will be an ongoing drag on Chinese economic activity.
Beijing, meanwhile, is also taking increasingly aggressive measures to prop up Chinese stock markets, with China's top securities regulator fully suspending the lending of restricted shares starting on Monday. Lending restricted shares is often used for short selling, which is a way for investors to bet that a stock's price will fall. China's main benchmark index, the CSI 300, has dropped around 20% in the past 9 months, with around $6 trillion in market value wiped out over the past 3 years. The latest restrictions come after the government cut bank reserve requirements in a bid to boost shares. A brief rally on markets was followed by another retreat last week. Earlier, France 24 spoke with Xinity's chief markets analyst, Han Tan, on whether those measures are having the desired effect.
We are seeing more signals of policy support out of Beijing, and not just for the property sector, but also for the stock market in China and even the broader economy. So that narrative or those hopes are helping push these Chinese and Asian stock indices higher.
Well, trading in Evergrande shares was halted in Hong Kong Monday after they fell around 20% in the wake of that liquidation ruling. Most of the damage from the Evergrande debt saga, though, already priced in. The Hang Seng overall up 0.8% on Monday. Shanghai, though, in the red by 0.5% despite those latest short selling restrictions. The Nikkei in Tokyo and the Kospi in Seoul, each notching some decent gains as investors look ahead to the U.S. Federal Reserve's next policy decision this week, along with quarterly earnings from a raft of top U.S. tech firms. And finally, for business, the Africa Cup of Nations is well underway in Ivory Coast. The football tournament generating more than just cheers and jeers. For many locals, it's bringing plenty of revenues. Ivory Coast is expected to be one of the world's fastest growing economies this year, some of that attributed to the Cup. Eliza Herbert takes a closer look.
It draws in fans from around the world, all united by one thing: football. And with their devotion comes merchandise. For these Abidjan locals who make and sell football shirts, they are hoping the African Cup of Nations will be a profitable one.
Our shirts are a bit cheaper. You have imports, and then you have the ones we make ourselves that are locally made and cheaper.
To keep up with demand during the Cup, the owner has had 8 employees working around the clock, which he muses could change if his team loses.
If Ivory Coast are knocked out, it won't be good for our business. It won't be good at all.
He's not the only one with stakes in the game. The government has invested $1 billion into the sporting event, building 4 new stadiums, 2 new bridges, and upgrading numerous pitches, roads, and hotels. It's a massive investment in a country where half its 25 million people live on $1.20 or less a day. The hope is that it will be a magnet for tourism that raises visibility and boosts the industry for years to come. And for these vendors, the spirit is high.
We can still sell shirts. Even if Ivory Coast are out, we'll manage to sell. We have Mali, we have Guinea, we have others.
All up, over 1.5 million visitors are expected to attend the competition, most clad in their team's colours.
That's it for business. Back to you, Stuart.
Thanks very much. Brian Quinn with the business news for us here on France 24.